Chase by Dallas, make it hurt.
Topic of discussion for today. Let's see the properties. Good day, everyone. Welcome to another episode of Let's Talk Commercial Real Estate Investing, the Black Community Edition. I'm your humble host, Dominic Green, managing partner for Tenneco Commercial Real Estate Services here in the Dallas area. It's Education Wednesdays. Forgive me, my voice is probably a little rough, under the weather a little bit, but nonetheless, it's Education Wednesdays. Here we talk about all things commercial real estate, what's going on in the market, things that I'm seeing, opportunities that are coming on the market, collaborating, all those good things for our community, right? To help us to acquire and invest in commercial real estate, income producing commercial real estate, that is. And for those that are more opportunistic, stuff that's vacant, to look to redevelop, or in general, for those that look to do new development, right? So today, I really want to just kind of discuss some stuff that I've seen or seeing, and it's actually relating to the office market. So lately, a lot of the office buildings have been hitting the market, especially some of your Class A type buildings, B, and then obviously the stuff on the lower end. It's been going to auction process. But nonetheless, office is hitting, and it's just part of one of those things when stuff is up, which, multifamily, industrial are up. Everybody's trying to pile into it. Retail slagged a little, but I think it's picking up a little bit. Office is still kind of one of those things where people worry about, especially from a financing standpoint. I believe the last thing I was reading about, the banks are still a little bit hesitant, although some are, on a case-by-case offering, but I think their LTVs are around, I want to say 60, 65%, 60%. So you definitely have to bring more equity to the deal. Investors are scrutinizing more, which you should be. The impact of work from home, and then prior to that was, the co-working space and all that. Essentially everybody's saying it's going to take, office down, but, office is still going to have a place in its use for organizations, right? Like I said before, people still going to want to come to the office. Now, will they be coming to the office, 5 days, 7 days a week? Probably not. I think there will be some remote flexibility. A lot of organizations already state that they're going to kind of have more of a flexible workforce. So from a recent report, I think that was done by CBRE, a lot of people that they survey from their clients as well, said that they're probably going to implement, remote working maybe 1 to 2 days out of the week. And that was kind of like the overwhelming standout or response in that survey. But nonetheless, they still want to get their employees back to the office because, again, it's just that human interaction, right? It's only so many Zoom calls and conference meeting calls that you can do that, is good, again, to be in person. It's the same thing with what's going on when people are getting out and about, right? It was one to be on the phone, FaceTime and all that, but, people still want to interact, get together. And the same thing is going to be true for office, though the model's going to change a little bit. Also from the reports, the businesses are still a little hesitant, what their future plan is going to be. So some are staying put in the space that they have. Some are expanding. Not necessarily a lot of people are downsizing. But office, when you invest in the office, it really has to do with job growth, right? And obviously the absorption rate, and then what's the current supply constraint. So like I know there's here there's been a couple of deals that come on the market, like in Urban and in Plano in particular, which was it's a decent building, by the way. But unfortunately, and one of the things that I'm putting forth to a family office about that product is that there's still a tremendous amount of vacant office space just in the Plano market, right? The Plano Frisco area. I mean, they're about to build another. Granite Properties is about to build another office building for Ryanair for them as their headquarters, which I don't know if they're leasing the entire building. I can't remember, but maybe a good portion of it, right? So that's going to add another 40,000 square foot of office space. And in that particular market, it's been categorized as, the place for headquarters, whether that's your main headquarters or regional. So that's something that had to be taken into consideration when having that discussion about this particular building that's was put on the market, because it's going to be highly competitive for that particular tenant because there's so many options, right? And it's also going to put pressure on your rental rates. Although you're going to try to hold them, because obviously financial covenants and whatnot. So you're going to have to account for that in more, free rent, or definitely in case more TI dollars, and additional rights, signage rights, parking rights. You're going to definitely have to improve the amenities. Because I was reading one article that they were talking about, from a standpoint of, because of, the Zoom calls, that now all the builders are going to look to, or at least the future development ones, are looking to enhance their video conferencing capabilities inside the building. Obviously, the big thing prior to that was the AC, HVAC, that being upgraded to circulate air more often, more frequently, and clean it. But nonetheless, it's not going anywhere, and I'm still a proponent of investing in office. But I look at it different ways because I have a kind of grasp of, looking at buildings, from a net lease standpoint, from a single tenant net lease. Like one in particular is the Capital One building up in Plano. I mean, they have a whole campus, but it's right off a major thoroughfare, and it's not too far away from all the retail and all the dining options. And then across the street, they're building the homes, multifamilies were nearby. So, it's kind of, still somewhat near the major freeways, but it's also really local in a sense. So something like that on a net single tenant net lease deal will be a great option, because then you can just break it down in the pieces. But you have a credit tenant that's in there, and they have all their operations. They moved all their operations there. In addition, I think they also own some land in the vicinity, but they own it. I don't think they're going to do anything with it. They're not going to spend that much. But they have the ability to. They're probably going to end up selling that land to somebody, to another developer. One of the ones that's up here that's been building. But nonetheless, absorption rates of supply. At the end of the day, real estate is going to come to supply and demand. The basis of economics. The more demand there is, the less supply. The higher the price, the more supply. Sometimes the less the demand, and prices go lower. So vice versa. And then you're also seeing vacant buildings come on the market too, which is interesting because the tenant just left. So those present a different type of way that you have to look at it, the cost of leasing. So one thing that I always look at it was the historical occupancy in that particular area, in that particular submarket, in that particular city, right? And for some of these vacant buildings, like on average, you'll see occupancy historically is somewhere between 72 and 85%. And so you'll see buildings that are 100%, maybe 90%, but historically, it fluctuates in between that market. So you got to account for that. And a lot of times when you see these OMs, they don't count for none of that, or they don't count for the, okay, the tenant might leave, there might be vacancies, they may get back space, because the devil's in the details in these leases. So they could have the right to give space back, which, if you weren't accounting for it and weren't planning for it, that could definitely hurt you. But you got long-term leases, you got a credit tenant. It's just the opposite for those investing in multifamily, right? Your tenants are could be high income earners. They could be in the middle. They can be on the lower end. Their leases are typically maybe 12, 13 months versus a investment grade tenant, like I said, a Capital One, a PepsiCo, IKEA, or something like that, or even the government, right? And that's a whole nother different topic. But where they're signing these 10-year, maybe max leases, but they're probably gonna be a little bit shorter, closer to 5 to 7, somewhere in there. But there's a longer term lease, an investment grade tenant that more than likely is going to pay their rent. And as long as you take care of your tenants, as long as you satisfy them, because remember, real estate is about the people. So again, you taking care of your tenants, you taking care of your maintenance, you're having communications with the tenants, figuring out what else could you do to make their stay better, what do their employees need. And I look at that just from a standpoint of just the real estate in general. Like if I'm looking at a certain property, what's around it, right? Especially with office, right? The thing is, the office is part of the branding, and the brand and the type of workers that you have, they want to be close to stuff that's they want to go near to. So now oftentimes they want to have to drive miles and miles, miles just to get there. So that's why you start to see some of these companies doing the hub and spoke, where they have their main headquarters in suburban areas. They have like a satellite office, and they use a combination of co-working and maybe a small office building. Who knows? It just depends on what the plan is. But this all to say that there's still opportunity to invest. And I think right now, given that it's not in favor, there is hesitancy, is a struggle to get it, a struggle to get it financed. There's a great opportunity, but you gotta figure out to pay attention. I think this reminds me back around '08 when the whole multifamily thing is, where people were with the housing crisis and stuff like that, and people banks weren't looking to lend as much. It was on the news. It was kind of falling out of favor. Cap rates were a little bit higher, well, definitely higher than they are now. But all that came to a factor and came to play. But understanding the fundamentals, understanding real estate investing 101, location, understanding your tenants, understanding your customer, understanding the community, all that played into effect to where obviously the big guys, Blackstone and them, made a huge bet and bought all this strategic trophy type properties at discounts that they probably will never see again. We may or may not, but definitely not right now. Now with things trading in 3.5, 4s, which is not a problem. It just depends on your business plan and what you need to do to get the lift out of it to hit a return on cost number. Because at that point you can't be buying a certain cap, especially ingoing cap. It's just about executing your business plan, but it does make it to where, depending on your plan, that you definitely have to execute and have. If you don't have any room for don't have any buffer room for incidents, then you could be a problem. But again, going back to investing in office buildings, you'll definitely want to see what the stacking plan is and all that basically is. And a lot of times you'll see that in the OM if you ever looked at one before. But a stacking plan just basically shows kind of like the outline of a building, and then what floors are the tenants on, how much space they have. It's kind of boxed off. And they kind of color coded to tell you what's vacant when their lease expires, so you kind of get an idea what your rollover, because you got to factor in who's rolling over soon and what's the probability of them probably renewing. And if they're not going to renew, you got to factor in the cost for that, because a lot of times the lender is going to make sure you have reserves for your tenant improvements, the leasing commission to lease that space. And then what is the current cost of TI in that particular market? Office can range from anywhere from 30 to, I've seen as high as 65, depending on the type of tenant. And that's also including the type of condition of the space. But then them going in and basically doing a turnkey for them in exchange, obviously, for a longer term lease and probably a slightly higher rate, because nothing is free. And I can tell you that just from experience of just leasing when we first got into the business of leasing, helping business leases, nothing is free. Everything is paid for. Now, is it accounted for? I have realized that some owners don't account for that. But those are most of the smaller ones, not the institutional guys or the guys that own multiple buildings. And then what's the leasing plan, right? Who are you going to have the lease? Professional management. All those things kind of factor in consideration into, office investing. And then understand the trend, right? The trend in the market. But like I said, work from home is going to change. Zoom has changed the way we do business. But at the end of the day, you still meeting people. People are still being meeting. And I think, from my perspective, looking into all the things that are happening, because I think everything's interconnected. Commercial real estate follows rooftops. So what's happening residentially, what's happening in other segments of commercial real estate. Is hotel travel, is hotel picking up? Just for instance, there's more business travel happening. Okay, great. That kind of gives you an idea about, what businesses are thinking about getting back to some type of normalcy, going to visit and stuff like that. So I think all that plays in obviously what's happening in retail, which, restaurants have kind of picked up here a little bit. Shopping has picked up here. I was having a conversation with somebody also about, they was talking about, retail is completely dead because of Amazon, which I understand. Amazon is a marketplace. There are retailers on there. But with that being said, a lot of these direct to consumer, like I told them, the Warby Parkers, the Bonobos and stuff like that, they started online. I mean, there's only so much you can grow online, but retail, the physical brick and mortar, becomes part of the plan because they realize that when they opened up the location strategically, they increased sales both online and in store because the experience is all part of it. So, I think a lot of times stuff can get overblown. I'm trying to think what my friend says. My partner talks about buy the rumors, sell the news. So it's kind of one of those things. But to get back to it, just wanted to drop in on Education Wednesdays, talk about investing in office because I was just a couple of things I've been looking at, stuff I'm trying to put forward. Cause I'm still a managing partner because we do have a couple of clients that are interested, and then we have a client that's working on trying to acquire office building. And you still know my favorite is either low rise, mid rise, and then obviously the flex buildings, because I think those are more diverse. And these million square foot buildings, I mean, most of that stuff is going to be vacant if ever filled up. So I'm glad to see some people, especially here in downtown, where they're kind of going back and buying these buildings and they're making them multi-use. So it's hotel, residential, and office. Because I just don't think at the end of the day, I don't think there's going to be that great of demand because Texas has so much land. So you can kind of build where the land is. So unless it's more constrained, unless it's harder to do restrictions, stuff like that, I mean, you typically just go right over. And as long as you can get passed by the city, you just go build an office building, right? So you got to be more strategic. You got to understand what the theme is for that particular building can be, who you're going to be targeting, and who's the best to help you lease that building up. Obviously, the big guys' names, the CBREs, the JLLs, and them. Because I definitely believe it's not one of those things you should do internally unless you have the expertise, especially on large stuff like that. Maybe something smaller and local, but something that's big and large. You definitely want to have more professional institutional guys on that, just because they're reaching the type of people that they target already. So, like I said before, just wanted to jump in here, talk about, like I said, it's Education Wednesdays, talking about what I'm seeing, participating in. I'm still working on putting together my team for this affordable housing, and that's progressing a little bit. So I'm grateful for that because, like I said, this platform is designed for we can have conversations and collaborations about investing in commercial real estate. And so for me, I think it's just about that time to take what we learn and leverage that and provide information and research and collaborate and acquire properties. I think that's one of the things that with the pandemic kind of highlighted to me, definitely myself, and my partner, that it's I think it's time. That there will be a right time, but I think it's time, and it's just being strategic about how to build it. And for me, building this investment platform to go out and acquire these type of properties. I think this is one of the best ways to start building the foundation of your pyramid, building the foundation of your house, and just go up from there. Something that's stable. There is a need, a huge need for affordability. Um, Competition is a lot, but working through that, it's numbers games at the end of the day, just making offers and all that stuff. But as far as like I said, investing, we're long term. It's not if and or but. Definitely looking to be in commercial real estate, private equity, and all that good stuff. But again, guys, send your comments, leave comments below. Reach out to me if you have any questions. I don't know everything, but I'll do my best to find it. I'm here to help. I hope you all guys are here and taking advantage of any information that's provided. If it's something particular you guys want me to talk about, definitely let me know. If we need to get specific, if you want me to do a video on maybe some underwriting and stuff like that, which all this stuff varies, but I kind of gave you kind of the blueprint that I started off with, how to underwrite these particular assets. If you need that information, again, let me know. But until next time, guys, definitely happy investing. Like, share, subscribe. Please, please, please like, share, subscribe. Let's continue to grow this community. Let's continue to have these conversations so we can build generational wealth, so we can have influence, and we can take care of the people that are most important to us and also fund the things that are most important to us as well. So until next time, happy investing. Peace.
These my dollars make it hurt.